How do I find my option selling trades? So the bulk of my trades are put spreads, selling put spreads, or selling naked puts. But there are different scenarios that will make me take the trade or not. So first thing is an earnings trade. I like to play earnings trades because usually IV is high around earnings. And it's a quick trade. It's a one-day trade. I can close it the next day maximum. I keep it for the week, usually when things go well. So how do I find which stocks have earnings? I usually go to Finways. I look at Screener. I'll use a market cap over 10 billion. And on earnings date, I'll look for next week or this week or today after market close or tomorrow before the market open. Depends if I'm looking on the weekend or if I'm looking during the week. If it's during the week, I'm going to look at which stock has earnings today after market close and tomorrow before market open. On the weekend, I'll just click next week just to give me an idea what has earnings next week. So I can see that Accenture has earnings, FedEx, and Nike. Most likely, I'm going to try to play Accenture, FedEx, and Nike with an out-of-the-money put credit spread. So right away, these are 3 potential trades that I'm going to make next week. I also use a website called Earnings Stats. It doesn't have all the stocks, but usually has the common ones just to see how these stocks performed in the past. So let's look at ACN, for example. And then on dashboard here, I'm going to look up actual versus expected. I like to look at that chart. It's simple. And here you could see that it shows that you can see that most of the time it goes up after earnings. It goes down sometimes as well. But see the gray zone, the shaded gray, that's the expected move. And then the red and green bars, that's the actual move. So you can see that only 1, 2, 3, 4, 5, 6 times out of, I don't know how many times is this, but it seems a lot. Only 6 times did it go outside of expected move after earnings on the downside. Otherwise, every other time it was either inside expected move on the downside or it went up. So that shows that I've got a good chance of winning on an out of the money put credit spread. But you could see the last earnings was pretty bad. The last earnings, it went below the expected move on the downside. So that's not good for my out of the money put credit spreads. If I go back to dashboard, I think on dashboard I could see, not the dashboard, sorry. If I go back to stock stats here, it shows me how many times, okay. So 56% of the time it went up after earnings. So out of 71 earnings, 56% of the time it went up. And it shows the percentage here of how many times it went down, but outside of expected move. So outside the expected move stats. So you can see 9 times it went outside of the expected move on the downside. So 9 times over 71 earnings is the percentage of the times that it would go outside the expected move on the downside. So since I like to play out of the money put credit spreads, that's what I have to worry about. So 9 over 71. So about 12% of the time it went outside expected move on the downside. So that's pretty high. I think that's pretty high. So that's normally what I'll do. And then let's look at Nike just for fun. I think Nike was a winner last time. I don't know if it's going to be a winner again this time. So let's look at Nike. So you can see 58% of the time it went up after earnings, and then 8 out of 71 it went below expected move after earnings. And if we look at the actual versus the expected in a chart, it looks nicer this way. Okay, yeah, you can definitely see there's more green. You've got some long reds here, yeah. So pretty much the same thing, but has a good chance of winning. And out of the money put credit spread on Nike has a good chance of winning. And the other one is FedEx. I'm most likely going to play FedEx. It was a winner for me, I think 2 times in a row. So let's look at the chart right away. So, oh my God, you could see all these ones here. These ones are not good. But since then, it's been up 2 times above expected move, but on the upside. So that's good if I'm doing put credit spread. That's amazing. But I think this one, you could tell right away that it's been down. It goes down after earnings more times than it goes up. You could see there's more red than green. And if we look at the stock stats, for sure it's going to be, yeah. So total up is 42%. So yeah, so that means it goes down more times after earnings. And it has gone down outside of expected move 8 times out of 71. So a little bit less than 12%. So that's not a bad stat. Because remember, I could still win on this trade and out of the money put credit spread as long as it goes down but doesn't go outside of expected move. So there's a lot of positions here, a lot of earnings events here that it could have been winners even if it did go down after earnings. The next thing I do is I go to MarketChameleon. I like to look at which stocks have high IV. It's important to sell stocks with high IV. Already earnings, usually stocks will have high implied volatility, but I'll come to this here. I'll start off with market cap over 100 billion, and then I'll sort on these two columns. I could sort first on this one here, IV30 or IV rank, sort by highest to lowest, of course. You can see you've got Snowflake has high IV, which is why I have a put spread on Snowflake right over here. 310, 305 for next week for December 18. I was hesitant if I should go to January or next week. Decided to go December 18 because I've got a bunch of spreads for January, and it's just annoying to hold so long. A lot of things can happen while you're holding. Market has time to react and come down. So you could be holding the trade and it's going well, but then because you're holding the trade for so long, you let crazy events come in and ruin your trade. Well, if you had held it for just 1 week, it would have been a winner already. So I'm going to try to do weeklies if I can. If not, then I'll go to 30 days or even 45 days. PDD has high IV. I actually placed an order on this, but it didn't get filled on Friday. Tesla, of course, has high IV right now, so I do have a trade on Tesla. I forgot what the expiry is. December 18 as well, 520, 515. So kind of close. Last week it dropped to 575. Hopefully it doesn't do that again. But yeah, hopefully this trade can become a winner if Tesla stays above 520 by next Friday. But yeah, so basically I just look for stocks with high IV and I try to see if I could sell an out of the money put spread on it. And ideally, I will try to enter them on red days. So as you can see, Snowflake had a red day. So stocks that have red days, I'll most likely do an out of the money put spread, especially if they have high IV. Amazon as well has high IV according to this. So I have a put spread on Amazon. As you can see, we've got Nike right over here. So Nike's on the list as well because it's got earnings. So these stocks don't even have earnings and they've got higher IV than Nike. So just because it has earnings doesn't mean that it has the best IV rank, but I'm still going to play it. I'll use this column. I'll sort on this column as well. They both show implied volatility, but a different metric, a different comparison. So I just like to sort on both of them. So this one here shows Snowflake as well. You got Pfizer, but even if Pfizer has a high IV, you can't go far enough. So Tesla comes back up again, and then you got Nike, you've got Johnson & Johnson. Got a lot of pharma stocks. You've got Accenture. Remember, this is over 100 billion. And then maybe I'll introduce the 20 to 100 billion. I don't like to look at it all at the same time because then it becomes too overwhelming. I've got too many options. I'm just taking it step by step. If I don't find too many things over 100 billion, then I'll start increasing my size so I could see more options, more potential trades. Now I've gone from 20 to 100 billion. Let's sort on this column here, IV rank. So we've got Unity Software, which I have. So I've got a put spread on Unity Software. I think I should have done another contract. I only did one contract. I think it deserves another one. I've got 115, 110 for January 15, collected 95 cents. Could have collected more. I'm going to try to do another contract next week if it drops again. So Unity Software, you've got Palantir, got Spotify, Moderna. You've got Twilio, but just keeps flying. So it would have been a good trade if you did it before it started flying. Could have closed it easily by now. Let's sort on this column here instead. You've got Unity Software again. You've got FedEx, so it has earnings next week. So you see 20 IV rank for FedEx is 27, but this column here shows an IV rank of 80%. So if we hover above the column just to see what it represents. So this shows where the current IV 30 ranks among the daily IV 30 values for the past year. So if today's IV 30 is higher than 80% of the observations within the past year, the IV 30% rank would be 80%. So that's what you're seeing here. That's what this explains. So it still gives you a good indication whether implied volatility is high or not. But this one, on the other hand, compares the 52-week high and the 52-week low. So where the current IV 30 sits relative to the 52-week high and 52-week low value for the symbol's IV 30. So if the 52-week high IV is 30 and the 52-week low is 10 and the current IV 30 is 20, this IV 30 would be 50%. It is 50% of the way from 10 to 30. So they both have a different calculation of IV rank, but I think they're both suitable. So I use both of them. So you've got FedEx, which has earnings. That's why it's there. You've got Biogen, but I don't think it's a stock that I'm ever going to touch again after a trader I know lost $21,000 on it. So yeah, nothing pops up really besides the one I just mentioned. Let's maybe add some more market cap. So let's go from 1 billion to 10 billion. We did 20 to 100. We did over 100. So we've got 1 to 10 billion left. Let's see what we get. We got Fubo TV. I've got a naked put on Fubo TV actually. Where is it? There we go. 20 strike. Collected $1.50 for January 15. I think Fubo's at 27. Let's see where it's at. Yeah, 27.5. So I'm at a 20 strike and I collected $1.50, which is really not bad. And the capital required for this trade is really small. I think it's like $100 or something. So less than a credit spread. You've got Lightspeed, Lemonade. So I've got a put spread on Lemonade as well. It's got a high IV. What's the IV on Lemonade? 97 and 92. Perfect. Yeah. So I got a put spread on Lemonade, 65.60. Collected $1 going to January 15. So look how far I am, and I collected $1. And in fact, I might turn this trade into a naked trade. If it gets breached, I'm going to sell the long put, collect premium from the long put that I'm going to sell, and then I'm going to turn the 65 short put. I'm going to keep it and just roll it as a naked put. So I'll turn the trade into naked put if I have to. And sometimes I'll open trades even if they don't have high IV. For example, this one here did not have high IV, but it dropped so much after earnings that I'm expecting a mean reversion. I'm expecting it to come back to where it was. So I decided to sell an out of the money put credit spread on it, even though IV wasn't so high, but I did it for $1. So 5-point wide, collecting at least $1. Visa, same thing. Zoom, same thing. Zoom had low IV when I did this put spread. I went to 340 and it's really not that far, 340, but I collected $2 on a 10-point wide spread all the way to January 15. Adobe was an earnings trade that I rolled before earnings because I felt like I didn't choose the best strike, so I rolled it just in case. It would have, if I had kept it for last week, it would have been a winner. Would have been close, but it would have been a winner. But regardless, I rolled it for February 19. So I just need Adobe to stay above 465 by February. And Baba is a trade that I just keep rolling because it keeps getting close for comfort. So I just keep rolling it. And right now I'm at 255, 250 all the way to February 19. I opened Nvidia. It wasn't great. So I've got stocks that I like to look at anyways, regardless if they have IV or high IV or not. So that would be Amazon, Tesla, Netflix, Nvidia, Zoom. So basically the big tech stocks, I like to play put spreads on them regardless if they have high IV or not. But usually I'll wait for a red day. So if they get a red day, then I'll sell an out of the money put spread. So that's why I have Nvidia. Where's Nvidia? I have another Nvidia, this one here. This was because of last week when it dropped a bit. I went to 475, 470 to January 15. I could have gone further, but I sold it too early, and then Nvidia dropped even more afterwards, so I didn't get the best entries. Same thing for Tesla, same thing for Amazon. Got Amazon 3,005, 3,000 for next week, collected $1, December 18 expiry. So I've got this CRM that I closed last week, but the reason I entered this trade is just because it dropped after earnings. It didn't have necessarily high IV, but because it dropped a lot after earnings, then I sold an out of the money put credit spread for January 15, giving myself enough time just for the stock to move around a bit. And I was able to close it last week for more than 50% profit. So the other thing I'll do is I'll go to FinWiz, remove earnings here. I'll keep a market cap over 10 billion, and then I'll look at what dropped hard. And then that's how I'll pick my entries. For example, Lululemon dropped hard, but when I looked at it, IV wasn't so high. I couldn't go that far away from the current market price to collect a decent premium. But that's what I would normally do. I would look at what dropped hard, and I would try to do a put spread on it to see if I can collect at least $1 on a 5-point wide put spread at expected move. If that's the case, then I'll do it. At the same time, I'll check to see if it has high IV or not. Snowflake dropped, as you can see here, 5%. That's decent, and it has high IV. So that's a perfect candidate for me, which is why I have a put spread on it. Now let's just hope it doesn't drop even more. But guess what's gonna happen? If it drops even more, I'm going to sell another one, and then I might roll my existing one. So I might roll it to further expiry, giving it more time. But if I want to roll it for a credit, then I need to roll it before it breaches 310. But I mean, Snowflake's at 350. I don't think it's going to drop below 310. It can come close, but I don't think it's going to drop below 310. But if it drops below 320, 315, then I might take action and roll it to January, and then I'll definitely sell a new put spread either for the same week or for the following week. So what's the week after December 18? So for December 24th, I think. Yeah. I think December 25th is closed, so it'll definitely sell one for December 24th if Snowflake keeps dropping. All right, I think I've given you a lot of details on how I find my trades. If you have any questions, feel free to ask them in the comment section below. And like always, if you can open an account with Questrade to trade on the stock market, to sell options, use my referral link below to get $50 in free trades. If you enjoyed this video, click the like button, share with a friend, and subscribe to the channel. Thanks for watching.